Welcome back to our weekly market recap. This week, the Fed delivered a rate cut and markets absolutely loved it. Stocks flipped to new highs, volatility collapsed, and suddenly everyone is asking the same question. Are we officially back in a Goldilocks scenario? Or should we already be worrying about what happens next year? And of course, what does all of this mean for crypto? Today we'll break down the charts, look at what the bond market is really telling us, and figure out whether this rally has legs or if something bigger is brewing beneath the surface. So let's dive in. I think we are in a Goldilocks macro regime. We have accelerating growth. We have inflation falling. So oil is down, which is the biggest CPI input. And also we see owners equivalent rent rolling over, which is a major lagging CPI component. And together these basis effects are improving, which means we have disinflation, which looks persistent. And that's also maybe an explanatory factor for the Fed reaction. The market expected a hawkish cut, and the actual Fed outcome was less hawkish than priced in, fewer dissenters, and also Powell sounding more worried about labor market softness. And the result was equities surged to new all-time highs, whether you look at the S&P or the Dow. So the macro takeaway is that this is one of the single strongest historical asset allocation environments. Again, growth is accelerating, inflation is falling, Fed easing bias, and liquidity is supportive. So that's likely an indicator for risk on season and likely extends into Q1, Q2 next year. Now, if you look at this chart, we see a curve steepening because of a deteriorating US credit quality due to the big beautiful bill. So you see the short end, which is determined by the Fed, is anchored and by the Fed liquidity injections. Yeah, so green is the current curve, orange is the curve 1 month ago. But you see the long end refuses to rally despite the rate cuts. That means the term premium is rising because people are worried about credit quality of the US. Now, if we look at the 10-year rate, you see it has been one of its lowest volatility regimes in 20 plus years. So yields are at the same level today, 4.2% roughly, as in October 2022, meaning bond prices have gone nowhere for 2+ years, while the Dow did plus 50%, the S&P 500 plus 80%, and the Nasdaq 100 plus 125%. So there's really a stunning divergence, and this underscores that equities are able to rip despite no support from falling yields. And bonds have provided no signal for US risk assets during this cycle. And that tells me that markets are being driven by equity-specific flows. Yeah, for example, AI, CapEx, the earning strength we have, and global breadth, not duration values. And as you know, sector rotation is the lifeblood of a bull market. We see that in equities finally. You see, for example, that the iShares Russell 1000 Value ETF is hitting new all-time highs. So it's less about the tech sector anymore. It's more about the classic industries now. And you see here also, if I look at the ratio charts, value versus growth, or here it's vice versa, growth versus value, meaning if this chart is falling, value is outperforming growth. You see we have that since a few weeks, and I can imagine with what the Fed is now doing, that this is also very supportive for value stocks. You see a similar thing with small caps, but here I have a chart which is the Max 7 versus the S&P 500 less the Max 7, and you see that this has broken the trend line. Now that doesn't mean that the Max 7 has to fall, it just means that the other stocks are likely outperforming. Yeah, so we have a kind of a fatigue for the larger tech names, and that's completely normal in a bull market with sector rotation. Which brings me to silver. I don't look at gold this week, but silver is really astonishing at new all-time highs. And this is happening against rising real yields because inflation break-evens are coming down. So I think that's the driver for this is really the fear of where do I park my money, and of this over-indebtedness we are seeing worldwide, but also what's happening to Russian reserves in Europe. We are discussing if we just can't take the 200 billions from the Russians away. And of course, this pushes nations to precious metals, which is a very interesting phenomenon as of the last few years. So also, of course, tailwind are is the falling dollar with it falling DXY here. So as long as this chart is going down, that's very supportive for risk assets. And so it's a well-established trend since a few weeks, hitting resistance at the 100 level. And that's helping stocks, that's helping precious metals, commodities, but not crypto at the moment. So I come to that in a second. When I speak of crypto, I want to start with the crypto stocks. So that's the digital assets equity ETF from VanEck against the HODL ETF, which is the Bitcoin ETF. So this chart is basically, this is going up, crypto stocks are outperforming, and Bitcoin is underperforming. And this is what's happening since April, since the April lows, the tariff lows of this year. Looks like a very bullish chart. And I think that's also part of the problem now, that people are not buying the token, but are running to the crypto stocks and feel safer there. Of course, it's also AI related due to the Bitcoin miners, but I think either we hit resistance here and crypto tokens are outperforming again, or we break through resistance and we have a further push for the crypto stocks. That remains to be seen. But it's a very, very interesting and obviously a bullish chart here. Now Bitcoin, and let me hide this projection, is you can say maybe that's a bear flag here. We haven't done a lot over the last week. We are hovering around the 92K level, which is giving what I've told you, what happened in crypto stocks, what happened in stocks generally speaking, and the value stocks and also commodities. Disappointing behavior. I think crypto should be stronger, but for whatever reason, crypto is lagging over the last few months, or also disappointing this year. And I have to show the projection line here again, which is just the fractal from 2022. It's astonishing how it follows this old fractal from the last cycle. Now, that's not a prediction, but I still think you have to keep that in mind. Yeah, so it's at the moment not overly bullish for crypto. However, what's interesting is that in this environment, Ethereum is outperforming Bitcoin. Here you see the ETH BTC ratio. We broke this trend channel here. And so that's generally speaking a good sign for altcoins. So that's the reason why I'm cautiously optimistic. So it's important that we hold the 92K level or the 90 level in Bitcoin. But I would love to see more dynamic now, given the background of what the Fed did and the bullish behavior in the stock market. Now, what we have to keep in mind is that next year is a midterm year, and midterm years, generally speaking, haven't been good to Bitcoin and crypto. On the other hand, also midterm years were also challenging for the stock market. Given that we have now a very bullish background with bad liquidity and the Goldilocks scenario I described, maybe not the base case, but something you have to keep in mind here. As always, I forgot this chart. So let me delete this here. So that's Solana ETH. Interestingly, that means that when this chart is going down, that Ethereum is outperforming Solana. Something which we heard for a while since December 23 that Solana will flip Ethereum. Obviously, that hasn't happened, but we are now also at interesting levels here. So if the real altcoin rally should come back, this chart should turn here and go higher again. That would be extremely important for a bullish crypto picture. And as always, I want to close with the market vector crypto heat index. So no big news here. We're still hovering at super undervalued levels. So let's see if we can get breadth again. So what's the first sub indicators turning our coins outperforming Bitcoin? We see some green shoots there, but of course we have to see more positive trends within the top 100 and relative strength against Bitcoin, which is still at depressed levels. But you see, we are very undervalued still. So that's it for this week. Have a nice weekend and speak to you next week.